Charlotte McLeod with investingnews.com, and here today with me is Jay Martin, CEO of Cambridge House and host of The Jay Martin Show. Thank you so much for being here. Great to have you.
It's good to see you again, Charlotte.
Really good to be talking to you as well. We're doing our yearly catch-up ahead of the Vancouver Resource Investment Conference, which is coming up very soon in January. So, of course, we're going to get into all of the details on that so people can know what's coming. But before we go there, I want to ask you about your sense of sentiment in the resource sector right now, because we're coming off such an interesting year, and heading into 2025 looks like that is going to probably be even more interesting if possible.
Yeah, no doubt. This decade, isn't it? I mean, it's been defined by chaos and uncertainty. And frankly, I have no reason to believe that's going to slow down. Really nothing's changed in terms of my macro thesis on commodities, Charlotte. I point to three things, the same three things that a lot of people point to, which is geopolitics matters more than it ever has, right? My entire life has been the era of globalization. We've departed that now. We're in the next thing. And that new thing is going to take many years to shake out. But in the interim, it's uncertainty. That's just what it means, right? Countries that used to share resources aren't sharing them like they used to. And when the supply of something becomes uncertain, the price of that thing goes up. And that's fueled a lot of the commodity prices that we've seen. And the second thing is starvation of capital. Like, we've just gotten through 12 years of lack of investment in the sector. And so these two forces butting up against each other makes for a very bullish case. And, and then the third, just forecasting future demand. I like to lean on copper as my kind of primary because it's a good just barometer. And when people forecast the copper price and copper demand, often they gravitate towards, maybe what AI might do, what electric vehicles might do, what renewables might do, and find these anomalies in the forecast that may shoot the price up to the moon. And maybe that'll happen. Like, I don't know. Or they'll take the other side of the bet and say, we're headed for a globally coordinated recession and demand's going to crush, right? So maybe that'll happen too. I don't know. But when you deal with those uncertainties, the smartest thing you can do is just look at the past. Like, we could look at 50 years of copper supply and demand fundamentals. And in that 50 years, since like 1970 forward, we've had massive globally coordinated recessions. We've had massive technological disruptions. Like, those things have occurred many times in that 50-year bracket. Yet, if you look at the decade over decade supply and demand dynamics, they're very consistent. We add about 3 to 4 million metric tons per decade, despite recessions, despite the dawn of the internet and smart technologies and all the stuff that might happen in the future has happened in the past. And demand's actually pretty consistent, 3 to 4 million metric tons per decade. The opportunity there for investors is that production always met demand in 1970, in 1980, 1990, 2000. It was very consistent. They grow in the same increments until about 2015. And then demand kept going and production kind of halted around 19, 20 million metric tons, back to our starvation of capital. If you don't invest in new resources, you do deplete what you have, but the world's going to keep growing. And so now this ocean is opening up, right? In that case, in copper, you can take that blueprint and apply it to silver and nickel and many other commodities, but that's kind of my base case and what I'm focused on.
Right. And these are themes that I'm sure are going to be expressed at VRIC, and we'll get into that. But before we go there, I wanted to ask how you are arranging your portfolio in light of all these circumstances, maybe things that you've heard that are interesting to you, that because I know that you're always out there talking to experts as well.
Yeah, I mean, I've been in this business for 15 years, and I think as a result of that, I can be a bit more aggressive in this industry than maybe others should be. And I just say that because, investing is risky. It's hard and it takes a lot of work, and you should gravitate towards where you have a competitive advantage. And I really live and breathe this business. And so, I am comfortable in markets like today when, mining equities are very hated. I understand and I have confidence in the cyclical nature of it. And so I'm more comfortable moving into this industry today than a generalist investor might be. And I totally get that, right? It's very easy to say you're a contrarian investor. To actually be one's a completely different scenario. But because this is where I've lived for the last 15 years, this is what I know. I have a higher degree of conviction in the cyclicality, and I understand the patience that can be required when you jump into an undervalued asset class. You hope it turns around in 6 months, but it might be 2 years, And so I'm very patient right now. I have a very barbelled portfolio, meaning I am really only in super stable purchasing power protected assets, cash equivalents, gold, real estate. And then on the other side is kind of the other side of the risk spectrum. So I'm in development companies, later stage exploration companies, mid-tier producers, lots of mid-tier producers right now, mid-tier and junior producers in the precious metals.
Okay, I think that's really useful to go into. And the other thing I want to pick up on just from your three themes that you were mentioning at the beginning is that dearth of capital that we're seeing. I'm wondering, can we talk a little bit more about that? And we know that the business is cyclical. It's what we've been talking about just now. When do you see that rotation perhaps coming back toward the resource sector finally?
Yeah, it's the $1 million question, right? Well, here's what I would say. Look at an indicator like a Warren Buffett. He's now sitting on $300 billion in treasuries, right? He owns like 4% of the US treasury market. So, you could say, oh, he's clipping like 15 billion in yield each year just by doing nothing. It's a pretty good bet. But the other side of that is that for the first time in an over 80-year investor career, he's not bullish on the generalist equity market anymore. And that's notable, right? But you're seeing that trend actually occur across a lot of the major investors that we sort of know as mainstream personalities. They're just de-risking. They're taking cash off the table. The next move isn't certain yet. And I'm not going to speculate on what they might do. But I would speculate that they're going to look for yield. They're going to look for companies with cash flow. They're gravitating away from speculative tech stocks and into utilities, industrials, and cash equivalents as long as they pay well. So when will the market rotate? I don't know. I'm not sure. But I was chatting with, actually a mutual friend of ours, Danielle DiMartino Booth, just yesterday, and she was walking me through this piece of research showing that the U.S. equity market has only been this overvalued relative to the underlying assets for 1% of time that the equity market has existed. So that's to say you could hang on for that last 1% maybe, right? Or maybe it's time to rotate out and just park yourself on the sidelines. I think right now is a great time to be patient. You don't have to make any moves right now. I think the equity market's crazy overvalued. It could still run for 6-9 months. So we see this, right? It often occurs where bubbles inflate way bigger than you think they can, but they do it all the time, right? So, but do you want to be the last one holding the bag? And can you afford to be? That's the other part of this, right? Can you afford to be the last one holding the bag? So I think right now it's a very good time to have that stable side of the barbell really buffed out. Be patient. Patience is often the best trade. It's the least exciting one, but often the smartest. I think it's the smartest right now. You've got time because we're going to see some reshuffling. I don't know when. We're definitely going to see it.
Yeah, I know the when question is always very unfair. So thank you for going down that path. And I think I'm hearing a similar message from many people. I just got back, I was telling you, from the New Orleans Investment Conference, and many people there were telling me, all right, we've had the election. We still have to wait for Trump to be inaugurated. Many things going on. There's so much uncertainty. So that makes a lot of sense to me. So looking over to VRIC, I wondered if you could talk a little bit about the people that you're bringing on to talk about all of these topics that are top of mind for you right now. I was just looking at the list of speakers. I see a lot of familiar names and some new ones. I'm sure there's more to be added as well.
Yeah, certainly. I am so excited about this year's agenda. There's really three buckets of content that we're going to cover. And at the highest level, we have a major focus on geopolitics this year. Geopolitics matters more than ever. And it's my firm belief that when you really dive in into these hot wars and conflicts that we see proliferate in the globe, often, and I would say always, what you find is a battle for resources at the core of it, right? When you really identify who the true stakeholders are, what their real incentives are, it always comes back to territory and the resources within that territory. And so I've armed our agenda this year with a lot of geopolitical analysts individuals like Colonel Douglas McGregor, Dr. Pippa Malmgren, Dr. Pascal Lota, who you might not be familiar with, but he's a genius when it comes to analyzing geopolitical situations. I'm very excited to have those three headlining the event this year. One step down from geopolitics, we get into macro finance. And so this is like kind of as a consequence of the direction the world's going, how are central banks reacting and how does monetary policy respond? And so in that bracket, you'll see individuals like David Rosenberg, Danielle DiMartino Booth, and then some more like trending into ours like Grant Williams, and Brent Johnson and these individuals who really cover macro exclusively. And then the third tier down is capital allocation into the industry that we focus on, right? Which is the mining business. And so in that tier, some familiar faces, the Rick Rule, Adrian Day, Frank Justra, Ross Beatty. I try to find a collection of, investors and company builders, right? Because often the company builders just have a great check on how capital could be allocated, should be allocated, because they're doing it. I mean, Ross is often the biggest shareholder of his own companies. He always has his wallet where his mouth is. All in this year, I think we have 80 keynote speakers that we're flying in. And so it's a very comprehensive 2 days. We have the one main stage and 6 perimeter stages. So it's quite jammed. But I'm very excited about this agenda. I think it's probably the most exciting and most comprehensive that we've ever built in our company history. I'm very, very pumped.
I'm really excited as well. And it sounds like definitely you've got so many high level topics to cover. And then that should help us make those smaller decisions as well on the resource industry. I have to ask, when it comes to commodities, are you seeing any themes emerging in terms of what might be discussed? I would think just from what you've been mentioning, we might see more of a focus than usual on the critical minerals angle, but you tell me.
It's really all over the map this year. That's a really good comments, and I'd expect some of our more granular capital allocator speakers, the Lobo Tigers and the Brent Cooks, to really get into that and where they're putting their cash right now. I think if there's a central theme this year, it's on resource wars. That's what it's coming down to. Is like companies like Indonesia, suddenly more in play than ever as the world's largest nickel exporter. And where they decide to place their alliance will have a big impact on the rest of us. And so, that's been the core focus. And within that, absolutely, it's like big focus on who controls the copper, who controls the nickel, who controls the antimony, the cobalt, all of these metals. And so from that lens, therefore, who's controlling the goods that we need to build the high innovation future we've all been promised.
Okay, yeah, I think it sounds really good. I'm definitely excited, as I've said a number of times already. Before I let you go, any final thoughts? Let us know the details. We'll have a link in the description for the video below that people can use to sign up. What would you leave investors with?
Yeah, last comments. Robert Kiyosaki is very excited to deliver fundamental investor education this year. In the past, he's come and really gotten into the gold sector. This year, he is on a mission to educate new investors to the space. I think he's seen a lot of activity in the last few years that's convinced him it's time to get back to basics and just good financial education and stewardship. And so we're doing a big feature with Mr. Kiyosaki, which I'm very excited about. He's always fun to have on stage. And this year's a bit of a different spin, bigger focus. I'm very keen to run through that with him. This is a unique event, Charlotte, because we're funded by the industry, which means that general admission for investors is actually free. You do have to pre-register. You can't just show up. You have to pre-register VRICmedia.com or cambridgehouse.com and get your ticket. But general admission is complimentary for anybody who wants to show up and get educated about how to allocate capital in this space. If you want to meet the keynote speakers, if you want to have a drink with Robert Kiyosaki or Rick Rule, Colonel Douglas McGregor, on and on, all these individuals that we're bringing, you can pick up a VIP ticket and then you get a front row seat. You get all your meals taken care of, and you get the most coveted event, which is the keynote speakers cocktail party at D6 Lounge at Park Casino, which is super fun. But that's available. But that's it. If there's an additional piece, it's that we are putting a a lot of focus on early stage investor education this year. So Robert's helping out big time with that. We've actually got a few more features right in line with that. And we just produced the Commodity University. So if anybody is like brand new to this sector and you're like, I believe in the commodity thesis, I don't know where to get started, we built a 10-chapter video course for anybody who is brand new. And it's at thecommodityuniversity.com. And it covers the absolute fundamentals for anybody who's just shown up to the sector and wants to understand what economic indicators impact the gold price, the nickel price, what should you pay attention to, how do you begin thinking about allocating capital, assessing risk, and all of these things.
That sounds perfect. So we'll have both of those links then in the video description. People can click them and hopefully we'll see lots of people new and old at the show. I'm really excited. I can tell you I'm here in Vancouver, of course, and I see the bus ads. So that's when I know it's getting close. So thank you so much for being here. Great to have you, and we'll see you next month.
I appreciate you, Charlotte. Thanks very much.
Of course. And once again, I'm Charlotte McLeod with investingnews.com, and this is Jay Martin.
Thank you for watching. If you like this video, make sure you hit the like button and subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below.